Indian equities drop from record peaks. Monday saw a pause in India's Nifty 50 and Sensex after hitting record highs. Why? Banks, with significant weightage, decided to take a breather. Nifty 50 slipped 0.18% to 21,418.65, and Sensex dropped 0.24% to 71,315.09. Banks and financials lost 0.57% and 0.39% respectively after a recent 2% climb in 2 sessions. Leading the losses were ICICI Bank and IndusInd Bank, down 1.5% and 1%. Tech stocks, the second heaviest sector, faced a setback, shedding 0.27% after an 8% rise in 2 sessions. Last week, IT companies rose after the U.S. Federal Reserve hinted at a possible rate cut in H1 2024. So where will Indian stocks go from here? Comment below.
China's property crisis hits middle-class wealth. Imagine your stock investments down by 30%, your salary down by 30%, and your property investment down by 20%. Did you know that 70% of family assets in China are tied up in property? And according to Bloomberg, every 5% drop in home prices wipes out a massive 19 trillion yuan, $2.7 trillion in housing wealth. While China's official data shows a small drop in home prices, reports from property agents and private data providers reveal declines of at least 15% in prime areas of big cities. UBS reported that net worth per adult in China slid by 2.2% to $75,731 in 2022. Total assets per adult fell for the first time since 2000 due to housing market difficulties. How do you think this real estate crisis in China might impact global economies? Comment below.
Government's tax haul hits rupees 13.7 trillion. What does this mean for the economy? The central government collected rupees 13.7 trillion in corporate and personal income taxes by December 17th. That's a solid 20.66% increase compared to the same period last year, and rupees 6.25 trillion of this total came from advance tax. The government has set a target of rupees 18.2 trillion for direct tax collection this financial year. That's a 10.5% boost from the previous year, aligning with the anticipated 10.5% growth in the overall economy. As of December 17th, rupees 15.95 trillion has been collected in direct taxes before accounting for refunds. This marks a solid 17% improvement compared to the same period last year. Breaking it down further, businesses chipped in rupees 7.9 trillion, while individuals contributed rupees 8 trillion. Again, this is before considering any tax refunds. What do you think this surge in tax collection says about the economic landscape? Comment below.
Nasdaq ditches Zoom, marking end of COVID era. Zoom is no longer in the Nasdaq 100 index. In 2023, its stock hasn't kept up with the big players, only rising by 5.7%. Remember 2020? Zoom was a superstar, rising by a whopping 400%. But now it's a different story. The company's sales have only been growing in single digits for over a year. Quite a change from those triple-digit quarters during the pandemic. Other big names from the pandemic era like Peloton and Teladoc are also struggling. Peloton's down by 23% and Teladoc by 13%. Another star, DocuSign, is thinking about selling itself because its growth has slowed down a lot in recent years. Is the era of pandemic winners coming to an end? Comment below.